monthly session that we have on analysis of RBI monetary policy review statement. Today's session, we will be discussing whatever announcements have been made on Thursday by RBI Governor. And our speakers for today are Shri, M.S. Sundarajan, former CMD.
Recent years, it has become a pioneer in fostering innovation and technology in the financial system, needless to say, and customer centricity and financial inclusion continue to be RBI's priorities. Every now and then they come out with the policies, how we can improve the customer centricity, etc., etc. The recent policy also, RBI has come out with various things which Mr. Rao is going to cover. One, turnaround time is getting elongated. The consignment takes a lot of time to reach the goods in the alternative routes. Number two, now global growth is expected to remain steady in 2024. See, ladies and gentlemen, it's worth going through because market participants always expect, now that the inflation is coming to the comfortable level, when are you going to cut the rate, etc. But central banks want to remain cautious, as I already said it. Emerging economies, the public debt to GDP is estimated to increase. It was about 55.9% in 2019. It is likely to move up to 68.3%. That is what the IMF has made a study. What is called, IMF has got what is called fiscal monitor, and it has come down. It was about 81% in 2022, and it is likely to come down to, now we have seen the global. Now let us come to the domestic economy. Now, ladies and gentlemen, domestic economy, on the supply side, the enhanced contribution has come from the manufacturing sector, and there is a, if you see in India, there is a buoyancy in construction activity. China is facing a problem with regard to construction activity, and also other services also in 23-24. So as we move further, the growth is going to be gaining momentum. It is holding up well despite low rainfall. As I said, it was less than the averages, lower reservoir level, delayed sowing, etc., etc. As I already said, Rabi sowing has exceeded the target. Industrial activity is also gaining. Again, if you see index of industrial production for manufacturing, the data has been released. It has registered a growth of 5.6% during October, November of the current financial year. Then yearly results, the yearly results of the corporates in the manufacturing sector remain upbeat, driven by the higher profit margin. See, RBI, whenever it makes a statement, it comes out with the rising integration of the global supply chain. It will support the next external demand. Headwinds from the geopolitical tensions, volatility in the international financial market, and geoeconomic fragment. However, in 22, it has come down to 7.2% in Q2 of 22-23, and further it has come down to 6.6% in Q2 of 23-24. That way, employment, there is an improving employment condition. October, CPI food inflation also increased to 8.7% in December 23 from 6.3% in October. The pickup in inflation was mainly driven by vegetable along with fruits, pulses, and sugar. So RBI is focusing and it wants to bring down the CPI inflation within the controllable level of 4%. So the decline in core inflation continued to be broad-based, volatility. However, on the positive side, Rabi sowing, as we have seen, has been satisfactory, and vigilant, and then it has to navigate the last mile of disinflation. So again, he is conscious, stable and low inflation of 4% will provide necessary bedrock for sustainable economic growth. So inflation trajectory, 4%. Liquidity conditions are concerned. They are driven by the exogenous factors. Again, He says exogenous factors which are likely to correct in the unforeseeable, in the foreseeable future, aided by market operation. So Reserve Bank will continue to be nimble, suggest greater resilience on the part of the external sector. RBI is confident of meeting all external requirements. Indian economy is doing very well, and